Hi, I'm the Tax Geek, and here are more of your taxes oversimplified. In this video, we're going to take a look at dividends, the different kinds of dividends you can receive, and how they're taxed and reported on your tax return. Dividends are periodic payments made to the stockholders of a corporation out of their profits. You may receive dividends if you own stock in a corporation or mutual fund. You may also receive what are called dividends that, for tax purposes, are not considered to be dividends. Dividends from mutual savings banks are considered interest and should be reported as such. Dividends from a mutual insurance company are a rebate of part of your premium and, as such, are usually not taxable. Dividends come in two flavors, ordinary and qualified. Qualified dividends are generally dividends you receive from a company whose stock you've held for more than 60 days. Unlike ordinary dividends, which are taxed just like any other income, qualified dividends are taxed using capital gains rates, which means you'll pay less tax on them. One issue with regard to dividends is double taxation. Traditional C corporations pay taxes on their profits and then distribute some of that profit to their shareholders in dividends, who then pay taxes on those dividends. Taxing qualified dividends at a lower capital gains rate works to reduce, or in some cases to eliminate, the double taxation effect. Dividends are reported to you on Form 1099 DIV. Like most other reporting forms, this form comes in several formats, and as long as the payer reports the legally required amounts to you within the required time frame, it does not matter which format the payer uses. Often, the 1099 DIV information will be a section on the front page of a brokerage statement. We'll go into brokerage statements in detail in other videos. We're going to use this Form 1099 DIV as a guide to dividends, where they're reported on the tax return and how they're taxed. We're not going to look at all the boxes on the form, just the ones that are relevant to most taxpayers. On the left-hand side of the form is the usual information on the payer and recipient, such as names, addresses, and tax identification numbers. Box 1A is the total amount of ordinary dividends. This amount is reported on line 3B of Form 1040. Box 1B is the amount of dividends that are considered qualified. This amount is included in the Box 1A amount and are not additional dividends. This amount is reported on line 3A of your 1040. If you have over $1,500 in dividends, you must also file Schedule B, listing the sources of all your dividends. Box 2A lists any capital gains distributions. These are distributions that are not dividends but are treated like capital gains. You enter these distributions on line 7 of your Form 1040, but if you have amounts in boxes 2B, 2C, or 2D of your Form 1099 DIV, you will have to file a Schedule D. Schedule D will be covered in another video. If you have amounts in either Box 1B or 2A of your Form 1099 DIV, you must calculate your tax differently, since you are eligible to pay capital gains rates on those amounts. To pay the least amount of tax, you must fill out a Qualified Dividends and Capital Gains worksheet. I have covered this worksheet in detail in another video, a link to which should appear above or in the description. But let's take a quick look at one taxpayer's worksheet. In this case, Adam is single with wage income of $54,150, $600 in ordinary dividends, all of which are qualified, plus $250 in capital gains distributions. Here is his Qualified Dividends and Capital Gains worksheet. As you can see, by using the worksheet, Adam saves $48 in taxes over reporting all his income at ordinary rates. Here is the income section of Adam's return, showing the ordinary dividends on line 3B, the qualified dividends on line 3A, and the capital gains distributions on line 7. Box 3 of the 1099 DIV shows non-dividend distributions. These distributions are a return of your original investment and are neither taxable nor reported on your tax return. They do, however, reduce how much you have invested, or your basis, and you need to keep track of these distributions because they are taken into account when computing your capital gains on the investment should you decide to sell it. Box 5 lists Section 199A dividends. These are special types of dividends, and this amount is also included in Box 1A. These dividends enable you to take a qualified business income deduction of about 20% of the amount of the dividends. If you have these types of dividends, you will need to file a Form 8995 to calculate the deduction, and the deduction is reported on line 13 of your Form 1040. Qualified Business Income Deduction is a rather complex subject and has its own video, which you can click on above or in the video description. And finally, Box 7 lists foreign tax paid. If you have multinational investments, these companies may have paid tax to foreign countries, which is then passed through to you as an investor. you are entitled to take this amount as a credit to reduce your U.S. income tax. This amount can usually be entered directly on line 1 of Schedule 3 and then carried to line 20 of Form 1040. If you have foreign tax paid over $300, $600 if you are married and file jointly, you will have to file Form 1116 to compute your foreign tax credit. Form 1116 is well beyond the scope of this video and will be discussed in the future. Of course, there are many more details to dividends, but this video is meant to cover those situations that apply to the vast majority of taxpayers. As always, links to additional resources and information is in the video description. If you found this video informative, please give it a thumbs up and subscribe for more content. Please share this video with anyone who would find it useful. You can direct any questions, comments, or suggestions to the comment space below. You can email me at taxesoversimplified@gmail.com, and for announcements of new video releases and occasional tax and financial tips, follow me on Twitter at TaxGeekUSA. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.